Okay, so I tested 21 Roundhill weekly ETFs, and the results were really shocking. I used several attributes in a scorecard that I created, and hopefully after watching this video, you'll be able to determine if investing in these makes sense, if perhaps you should stay away,
It's a dog. Very strong management. It's a dog, pal.
or hopefully help you find some gems among a sea of what ifs. Enjoy the video and let's get going. And of course, I do have to put out a disclaimer that nothing in this video is financial advice, and please do your own research. These are my opinions only. Always consult a financial professional. So let's dive into the methodology I use for this scorecard. In terms of data that went into it, I took it straight from the source, roundhillinvestments.com, and focused on the weekly ETFs. Now, I only covered 21 for the following reasons, even though there are 24. TOPW is a fund of funds, so I did not think it would be fair to compare them to single-focused ETFs. The others that I excluded were UNHW. This fund is simply too young to be fairly compared to the rest. And finally, TSYW, because it's a treasury-focused ETF, it's got a different structure. The yield is not a true comparator to the rest of the ETFs, and it should not be in this ranking. So when I built this scorecard, I looked at 6 attributes that I'm going to go over right now. The first one is yield. So which ETFs actually pay you the most income without chasing hype? What's going to be your bigger monthly income? What's going to be better cash flow? The next one is drawdown. So I don't just look at income, I look at how much you could actually lose, because you want to protect your capital and you want to avoid getting wrecked by 50 to 70% drops. Assets under management is the third attribute. And I check how much money is actually in the fund, because the bottom line is tiny ETFs can disappear. There's a lower risk of a fund shutting down if it has more assets under management, and there's more confidence and stability. Next is going to be the 3-month performance, because I want to see what's working right now, not last year. What's the momentum? You want to stay in winning strategies and avoid that money. Stability. And this is very important, because the bottom line is high yield means nothing if your income swings wildly from week to week. So you want predictable income, less stress, and more reliability. And finally, is it trending up or it's trending down? Because I also check if income is improving, because I want my payouts going up, not down. So let's say that the dividends started high and they've been going down the last few weeks. That's not a fund that I want to invest in. I want a growing income and better long-term compounding. And not to get too heavy into the math, but I do want to briefly explain the formula for drawdown and also for stability, because it's really important to be fully transparent. So drawdown is peak price minus current price divided by the peak price. And when you look at how I came up with stability, it's the highest payout minus the lowest payout divided by the average payout. So in this stability number, the higher the percentage, the more chaotic it is. You want a lower percentage, even though that sounds counterintuitive. You want a payout that is stable and not chaotic. So without further ado, let's go into the actual scoring. I'm going to start with yield. And for most of these attributes, they're actually scored on a scale of 0 to 2, 2 being the highest. And for yield, a score of 2 would merit 45 to 70% yield, score of 1, 25 to 45%, and a score of 0, and I have to stress this, it's either under 25% or over 70%. Even though it's a high yield, if it's too high, it's a potential yield trap. So without further ado, let's go into the scorecard. What I'm going to do is I'm going to start with yield, and I'm going to sort from the highest to the lowest. And please note the disclosure earlier that if the yield is too high, it would be negative in my opinion. So as you can see, these are some of the funds that are doing pretty well. And I'm not going to go over all of them, but some of the ones are COIW at almost 67%. You look at AMDW at over 55%. You look at TSLW at over 48%. and you take a look at the gold ETF that is over 45%, these are the top yielders, and they all got a score of 2, and they're represented by green. And moving on to drawdown, I'm going to sort it from the green to the red. And there's only 4 that meet my criteria. And I'm going to zoom in on that. And the 4 funds are COSW, BRKW, AAPW, and GOOW. Assets under management is an interesting class because they're all generally really small. Nevertheless, I did want to compare them amongst each other, and there were 4 that seemed bigger than the rest of the group. And let me zoom in on those. The 4 biggest ones were PLTW, HOOW, TSLW, and NVDW, running out at over 89 million. Let's talk about the 3-month performance, and unfortunately there were only 3 that came to the top. Both of the top ones were the gold ETFs, GDXW, GLDW, and COSW rounded that out. Now, for stability, unfortunately, none of them did well. They all did poorly.
What?
And the final attribute before we go into total score is whether they were trending up or down. Now here the score basically is either a 0 if they're trending down or a 1. Unfortunately, only 7 of the 21 had an upward trend. Let me zoom in for you. So the 7 are GOOW, AVGW, COIW, BRKW, AAPW, NFLW, and UBEW. Now the maximum score that any one fund could have in this model would be 11. 5 attributes with a maximum of 2, plus turning up or down would be a maximum of 1. So the top score went to GDXW at 6, and then there were a few that got a score of 5, GOOW, AVGW, COSW, NVDW, TSLW, and HOOW. Of note, GLDW got a score of 4, but not quite what I was looking for.
Who do you want to talk about first? None of them.
And my goal with this channel is to not only show you the good covered call ETFs, but also the not so good. Unfortunately, even if you look at the very top score of GDXW, it got about half the possible maximum points. And unfortunately, none of these weeklies, at least, would be ones that I would personally invest in. Again, this is my opinion. This is not financial advice. Always seek the advice of a financial professional. This is just my opinion. But the bottom line is through a combination of stability, yield, assets under management, unfortunately, none of them met muster. Thank you so much for watching. If you liked this video, please hit the like and subscribe button. My goal in this channel is to focus strictly on covered call ETFs, help you make decisions, and help you evaluate them using pretty objective methods, because there's definitely a lot of notoriety in this industry right now. Thank you so much. I hope you have a prosperous rest of your week, and I will see you on the very next episode.